Welcome back to Investing Talk podcast. We're going to be tackling JD today,
Okay.
one of China's e-commerce powerhouses.
Mm-hmm.
Now get this, JD saw a whopping 75% growth last year.
Wow.
But here's the kicker. Their stock is still down 47% from its peak 3 years ago.
Oh,
That's a head scratcher, right?
it certainly is a fascinating situation. That kind of volatility is precisely what makes JD such an intriguing case study for investors.
Yeah, why the disconnect between that growth and the stock performance?
Right.
What signals can we glean about JD's future?
Exactly.
And we've got a pile of fresh reports and analyses on JD to help us figure that out. Let's
Let's dive in.
dive in.
So first, let's look at the source of all the buzz surrounding JD.
Oh, yeah.
Analysts are forecasting a 10% year-over-year revenue increase for their upcoming quarterly results.
Okay, 10% is solid, but what's got analysts so optimistic? What's driving that growth?
One major factor is JD's innovative trade-in program.
Okay.
It's proving to be a real game changer in the e-commerce landscape.
Oh, okay. A trade-in program, like trading in your old phone for a new one.
Yeah, exactly.
Okay, I get the concept,
Mm-hmm.
but how does that translate into big wins for JD?
It's a brilliant strategy. Think about it. This program incentivizes customers to upgrade their devices and appliances.
Right.
Let's say you're considering a new smartphone.
Uh-huh.
The option to trade in your old device and get a credit towards a new purchase,
Mm-hmm.
that's a tempting proposition.
Makes sense. Removes that financial barrier.
Yeah,
Encourages upgrades.
precisely. And it's not just limited to electronics.
Oh, okay.
The source material highlights how the trade-in program is driving sales growth across various categories.
Interesting. Like what?
For example, you can trade in your old refrigerator for credit towards a new one.
Mm.
This stimulates sales and taps into the growing consumer interest in sustainability.
Interesting. Speaking of sustainable.
Yeah.
Is that something investors are paying attention to these days?
Absolutely. Consumers are becoming increasingly conscious of their environmental footprint. Programs like JD's Trade-in Initiative promote reuse and recycling. Investors are increasingly factoring environmental, social, and governance considerations into their decision-making.
So it's a win-win for JD and eco-conscious consumers. That's a great point. There's also this projection of a 22% rise in non-GAAP earnings per share.
Right.
Can you break that down for us? What does non-GAAP even mean for the average investor?
Great question. In simple terms, non-GAAP earnings excludes certain one-time costs that might not reflect the company's ongoing performance.
Okay.
It gives investors a clearer picture of their core profitability. Think of it like peeking behind the curtain to see the real engine driving their financial performance.
Uh-huh. So it's a way to see past the accounting smoke and mirrors.
Exactly.
A 22% jump in non-GAAP earnings per share does sound like something to celebrate.
It certainly paints a positive picture, and analysts are taking notice.
Good.
For instance, Nomura, a global financial services group known for their insightful research, has set a bullish target price of $50 for JD stock.
$50. Now, that's a significant jump.
Mm.
But how do these analysts even come up with these target prices?
Right.
What's the magic formula?
It's not exactly magic, but it does involve a pretty complex analysis.
Okay.
They consider a multitude of factors, the company's financial performance, of course, but also industry trends, future growth potential, even the overall economic climate.
Wow.
They use these inputs to build financial models and project where they think the stock price is headed.
So it's not just a random number they pull out of a hat.
Not at all. There's a lot of research, number crunching, and forecasting involved, but it's important to remember, target prices are projections, not guarantees.
Right.
They're a guidepost, not a roadmap.
Fair enough. So we've got this trade-in program generating buzz and boosting sales analysts, predicting rosy earnings, and a generally positive market sentiment around JD. But hold on, their stock is still down from its peak? What's the deal with that?
Yeah. That's where things get really interesting. Remember, investing is never a sure thing. Despite the positive signs we've discussed, some uncertainties could impact JD's future performance.
Okay, spill the tea. What kind of uncertainties are we talking about?
Well, the political landscape is one factor we can't ignore, specifically the potential impact of new trade policies under the Trump administration in 2025.
Ah, yes. The Trump card?
Always a
Wild card.
Precisely. While the specifics of these policies are still taking shape, any shifts in U.S.-China trade relations could create volatility for JD's stock price. Trade tensions, tariffs, those can have a real impact on companies operating in global markets.
Right. Makes sense. Businesses don't like surprises and investors don't like uncertainty.
It's definitely something to keep an eye on. And speaking of things to watch, we can't forget about the competition.
Oh yeah, JD isn't the only player in the game. Who are their main rivals in the Chinese e-commerce arena?
Well, the most formidable competitor is, of course, Alibaba. They're a behemoth with a massive market share and a vast network of businesses. It's like a giant octopus with tentacles reaching into every corner of the Chinese digital economy.
Wow, a digital octopus. I like that analogy.
Yeah.
So how do these competitors threaten JD's growth trajectory?
For starters, they're all vying for the same pool of consumers. It's a constant battle to attract and retain customers in a market as dynamic as China's. Think about it. Aggressive marketing campaigns, loyalty programs, flash sales. It's a digital arms race to capture consumer attention and wallets.
And they're not standing still, right?
Absolutely not. These companies are constantly innovating and adapting. They're investing heavily in new technologies, think artificial intelligence, big data analytics, drone delivery, to enhance the customer experience and gain an edge. It's a cutthroat environment.
So JD needs to keep innovating to stay ahead of the game. It's a constant race to the top. But let's zoom out a bit. What about the global economy? How might macroeconomic factors affect JD's performance?
That's a critical question. Global economic trends have a ripple effect on every business, especially those with international operations. Things like inflation, interest rates, currency fluctuations, they all play a role. And consumer spending, a crucial driver for e-commerce, is heavily influenced by these factors.
So if there's a global economic slowdown or a sudden spike in inflation that could dampen consumer spending and hurt JD's bottom line, right?
Precisely. Imagine a scenario where a global recession hits. People tighten their belts, discretionary spending drops, and even online shopping takes a hit. It's a chain reaction that can't be ignored.
Makes you realize how interconnected everything is. It's like a giant, complex web.
It is. And that's why it's so important for investors to stay informed about global economic trends and factor those into their investment decisions.
Okay, so we've got this mix of positive and potentially negative factors to consider. But let's talk valuation for a second. JD's current PE ratio is 12.54. Can you explain that in plain English for our listeners? What does that number actually tell us?
Sure. The price to earnings ratio, or PE ratio for short, is like a measuring stick for a company's valuation.
Okay.
It tells you how much investors are willing to pay for every dollar of earnings the company generates. It's like a popularity contest for stocks.
Popularity contest, I like that.
A lower PE ratio generally suggests that the stock might be undervalued. It could mean that investors aren't as excited about the company's future prospects, or they perceive higher risks associated with it.
So a higher PE ratio means more excitement, more optimism, potentially a higher price.
You got it. But remember, context is key. We need to look at the company's industry growth potential and the overall market conditions to interpret the PE ratio correctly. It's not a standalone metric.
Got it. So in JD's case, a PE ratio of 12.54.
It could be seen as relatively low, especially when you consider their recent growth spurt, the buzz around their trade-in program, and those positive earnings forecasts. It suggests that JD stock might be a bargain, but it's crucial to weigh that against the potential risks we've discussed.
Right? The trump card, the fierce competition, the ever-changing global economy. It's a lot to process.
Investing always involves a bit of a balancing act. We weigh potential rewards against potential risks, consider the company's fundamentals, and try to make the best informed decision possible. But remember, there's no crystal ball.
It definitely is a lot to juggle.
Yeah.
So for our listeners tuning in, what's the big takeaway here? What should they be pondering when it comes to JD?
That's the million-dollar question, isn't it? Given JD's current valuation, those bullish forecasts, and of course the potential risks we've outlined, what would you do as an investor?
I guess it boils down to, do you hop on board this potential growth train, or do you hang back and see how things shake out?
Yeah, there's no one-size-fits-all answer. Investing is personal.
Yeah.
It all depends on your individual risk tolerance,
Yeah.
your investment goals, and your overall assessment of JD's long-term prospects.
Right. Some investors might see that lower PE ratio and think, hey, this stock is a steal. Others might be spooked by the political uncertainty or the competitive landscape and decide to wait it out.
Exactly, and that's the beauty of investing. There's no right or wrong answer, just different approaches and strategies. The key is to do your homework, weigh the pros and cons, and make a decision that aligns with your own financial goals and risk appetite.
Well said. Knowledge is power, and hopefully this discussion has equipped our listeners with some valuable insights to help them navigate the exciting world of investing.
Absolutely. We've only scratched the surface today, but hopefully we've sparked some curiosity and given our listeners some food for thought as they research JD and other investment opportunities.
Thanks for joining us today. It's always a pleasure diving into these fascinating topics with you.
The pleasure's all mine.
And to all our amazing listeners out there, don't forget to subscribe to Investing Talk Podcast. Share this episode with your fellow investors and leave us a comment. We love hearing from you. Until next time, happy investing, everyone.